A new type of fraud is now the fastest growing financial crime hitting banks. Kate Rooney explains from One Market. Kate.
Hey, Morgan, the fastest growing and one of the hardest to detect. It's called synthetic identity fraud. Instead of outright stealing an identity, a criminal makes one up. It's sometimes called a Frankenstein ID. Criminals randomly pick or they can buy a social security number. They link it to other fake information like a birthday, for example, then slowly build credit over multiple years. They open accounts with financial institutions, take out credit cards or auto loans with no plans to pay those back. Notre Dame Federal Credit Union was one of the many caught off guard by fraudsters.
These look like bona fide real people. Again, looking at them one-off, they looked great. But when you pooled all of them together, especially out of the specific geographic area that this fraud group was working out of, you know, all the red flags and alarm bells were going off.
Analysts tell me that smaller lenders like Notre Dame are especially at risk because they don't have the same resources to spend on cybersecurity that the big banks have. I spoke to one Fed official who says it's largely underreported because there's no consumer knocking on the bank's door complaining that their credit is going haywire. Lenders write it off mostly as a credit loss. Some in Silicon Valley out here are tackling the issue using data. I spoke to the founder of Centilink, a startup working with major banks to verify customer identity. Centilink estimates this is hitting lenders to the tune of $2 to $3 billion per year. Analysts telling me the issue is getting worse as applying for credit mostly moves online. Issuers are also loosening their borrowing standards in this recent economic boom.